good morning, and good morning, guys. Welcome to another fabulous episode, guys, of Exit Strategies Radio Show. Hey, I'm your host. Yeah, y'all know. Colin J. Millette, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. Hey, if this is your first time listening to the show, you know what we say, you know what we do, but I need y'all to say it with me. Our mission is to empower our community through financial literacy and real estate education, guys. We're legacy building. So when you're doing those things, y'all know it, put the hashtag on it. So, guys, today, look, we have a phenomenal guest. I mean, look, a lot of people move down south from Ohio, but we got the guy to keep going back. All right. So we have with us Ken G with KRI Partners. And look, this is the show. I mean, look, grab your notepad, get your pencil, pad, whatever it is, guys, and start taking down these jewels and nuggets that Ken is going to bring us today. So, Ken, good morning. How are you doing?
I'm doing great. How about you, Corwin?
I'm phenomenal. So I appreciate you taking time out of your busy schedule, to be with us here today. So I'm going to get into and just kind of start with, if you don't mind, kind of give our listeners a brief introduction as to who you are.
Yeah, so grew up in Toledo, Ohio. If you don't know where that is, it's Northwest Ohio. Got my undergrad, University of Toledo. Then moved to Cleveland, Ohio, whopping 100 and so miles. Started working for a bank. Spent 5 years as a commercial lender while I went to the school at night. Case Western Reserve, got my degree in accounting. Then I went to work for Deloitte for 7 years as an accountant. And it was there that I just got tired of working like a dog. If you know anything about CPAs, we get beat up pretty bad most of the year. And so it wasn't until I was feeding my daughter in the middle of the night one night, when she was obviously very young, and I was doing the middle of the night feeding because it was the only time I ever got to spend with her. And I love that time. But at one point I realized, wait a minute, I'm feeding you in the middle of the night. And this is the best time I get to spend with you because it's the only time because I'm working so much. Yeah. I need to make some changes here, right? So I was working like a dog, doing everything I thought I was supposed to do, but I couldn't figure out how that was going to lead me to a place where I could put my kids through school without taking on a ton of debt. I couldn't figure out how that was going to give me an opportunity to spend more time with my family. In fact, being a CPA, I realized that it's probably going to go the other way.
Yeah.
So I said, you know what, I got to change this. And the next day I woke up and I did everything I could to go figure out the real estate game.
Okay.
And bought 3 properties total. Sold them 3 years later. Here's the legacy part, man. You want to talk about legacy? I sold them 3 years later for a profit of $500,000. So here I was working at Deloitte, working like a dog, couldn't put more than, some money in the bank, nothing like $500,000. And here I did this thing on the side, put $500,000 in the bank. So, before I had that realization, that epiphany, I couldn't figure out how I was going to put my kids through school. I couldn't figure out how I was going to do all these things that I want to do with my family and not work so much. Now I knew, and I not only knew I knew, but I knew it actually worked. So I made that switch. I said, you know what? I need to keep doing this. How can you not do this when it's that profitable? So there you go. That's how I got started. It's kind of a weird story, but it's the truth. It is exactly what happened to me.
So Ken, you just, man, look here. So that whole thing right there is like where I'm pretty sure some of our listeners, if anybody was in the kitchen this morning, in the midst of that section right there, they probably just kind of stopped flabbergasted. They were flipping a flapjack. It probably got all messed up. So now they got to make some more pancakes this morning.
My fault.
But the reality is that there is a fundamental, something that has to shock you to change. So your shock was you look down at your daughter and realize, wait a minute, this ain't how I want it. This ain't how it can be better. It can be different. Let me figure out a different way. So here you go. You say you bought 3 properties. So you bought
not one. No, they were separate, 3 separate transactions. It took me, a year and a half to buy them all.
Okay.
And it took me a long time to figure out how that business worked. But the point was that it got me going.
So let's talk a moment about KRI. Let's get around into, and kind of touch on some of the things like that. I know our listeners are probably asking, like, wait a minute, you did what? How did you do that? I know that's the question. Like, okay, I want to do that. So tell us first, if you don't mind, about KRI Partners.
Yeah, so KRI Partners is what I ended up forming back in 1997. So I've been at this a while.
Okay.
You heard the beginning. Then for about 10 years, we were buying properties in Cleveland. It's a tough way to make a living. We did quite well in Cleveland, but Cleveland's not exactly an area that people are dying to move to, right? They're just not. So about 15 years ago, I said, you know what? If I can do this in Cleveland, what would happen if I actually went to a market where people wanted to be, where people were moving like there's no tomorrow? And that's when I decided we need to start focusing in Florida. And we did that. So I got on a plane, literally got on a plane, flew to Tampa, got off the plane, and just started figuring out how it was that I was going to make myself relevant to, in a market where there are lots of people with lots of money in Florida. And, it took me 15 years, but, fast forward to today, we've helped hundreds of investors do exactly what I've done. We have bought and sold, hundreds and hundreds of units, probably raised $30 million in equity, to put in all these deals that we've done. And, our investors have done incredibly well, 20, 30% annual returns. So that's where we are today. We're raising money now for our current fund, which is, we go out, we raise money, we use that money, put it next to our own, and then we go buy properties. That's what we do now. That's not what we started out doing in 1997, but that's what we've evolved to now.
Okay, so essentially what I heard is you created a syndicate, brought a group of people together and took down a property. Over the years, you've accumulated, gains for your company. Obviously the investors made money along the way because they didn't make the investing. Now your structure is a little bit different. You still bring investors in, but the investors are not the bulk. They're only a portion of the entire project now.
Right.
Awesome.
Yep. It's still real estate though, right? No matter what structure it is, what we did on our very first property is still what we do today at the property level. We bought a property, we made it nicer, we figured out how to make it nicer. We were able to increase rents because of that. And then because we had more cash flow than when we started, we were able to sell it for a profit. That same business plan has survived the last 25 years, and we do it over and over and over again. It's just, depending on how you finance it and how many investors, all that stuff, it kind of turns into noise. I mean, it's a part of the business, but you had asked earlier, how do you do this? It's the basic blocking and tackling that has not changed. We just gotten a lot better at it over the last 25 years.
That's fair, effective and efficient, because all it is BRRR. So buy, rehab, refinance and, and repeat. Yeah. So
rinse and repeat. I call it rinse and repeat. Yep.
Exactly. Look here. So, sometimes we make it, Lord, I was talking to someone at some point in time recently, Ken, might've been even earlier today. It's echoing in my head, but about, the whole adage of, you don't have to rebuild a wheel. It's basically, like you said, you just do the same thing over and over and over. And, you have the momentum. So, one of the things, Ken, and this is something to kind of get to a particular point that I want you to kind of, start to nail with is, oftentimes people believe real estate can make you passive income, but it requires action, correct?
Yes.
Yep. Okay. So elaborate on that, because oftentimes people just think, well, I don't have to do anything, or investing. Let me say it that way, because rental properties, that's one thing, but in true investing is an activity, correct?
Yeah, it's funny. I've written about this many times and talked about it a lot. People, when they think of real estate, they just think it's passive. I'm here to tell you that my business is not passive. The people that invest with us, they are passive, and we do all the work. So I want you to think about the real estate, whether it's a single, double, triple, 10 unit, 100 units. I want you to think of it as a business. Somebody's got to do all of the things that you would do in any business. It just happens to be an apartment building, a single family, a double, whatever it is, right? So if you approach it that way, you make good decisions about whether or not you want to be the active person, the guy or gal showing the units and cleaning the apartments and, renovating and all that. Or do you really want to be the person that just opens their mailbox and gets the check? Right. Or not. Now that's a little dated, right? We don't even send checks out anymore. We just send it in their bank account. They just pull it up online. So, people have to make that decision as to what they want to do. Most people probably should be passive investors and invest with firms like ours. But, there's nothing to say that you can't do exactly what I did 25 years ago. I will submit to you, it's probably easier now because of shows like this. They didn't exist when I started, right?
Yeah.
They just didn't. I went to the apartment association and sat through probably some of the most boring seminars on the planet, but it was only thing out there that helped me figure out how to do this thing. And I was pretty focused on learning the business. So you make a really good point here, because your listeners have to figure out, what do they want? What fits in their life? It's a really important decision to make, and the one decision that everybody in this business has to make.
Yeah. And it's one of the first things, because there's so many different strategies and so many different things, Ken, but you got to figure out who you want to be. And everybody want to have control, but then they also don't want to do the work. So, and you can't quote unquote have both of those. You can have a majority stake, but if you're not doing a majority work, then technically you're at that point in time, you're the person that's getting the mailbox, or in this age, text message. That's who you are. Hey, deposit, and okay. But so many people, that, want it, but they're not putting in that work. So,
it's a lot of work, Corwin. That's why. They don't realize how much work it is until they really start diving in and realize, oh my God, this is hard.
Yeah. And so you're doing this with multifamily. So basically apartment, complexes and things of that nature. Am I correct? So
100%.
Larger.
All we've ever done. Yes, sir.
And I'm assuming, and this is an assumption, Ken, but I'm assuming that you're talking probably, 500 units and up as far as your development, so maybe 250 units and up.
Yeah, no, we actually stay smaller than that. We like 80 to 250. Okay. And the reason we like that space is the really big guys play in that bigger market, and they have completely different capital structures than we do. It's harder for us to compete. Those properties are, $75, $100 million each. And that's just, it's just not what we do. I really like being able to talk to our investors. Every one of them has my cell phone number. We have real people that invest in our deals, and we do real things for real people. So we stay in that space. I stay below that institutional radar, and I try to be the bigger fish in the small pond. And it's served us extremely well over the years.
I like that, Ken, because I really like that, because you make a very valid point. So one thing I think that's probably to your advantage, and for our listeners, guys, we're talking, just so you guys kind of get caught up and understand what we're talking about. We're talking about pooling groups of people with similar interests, which is to make some money passively, investing with someone who is actively investing or actively, working in the industry. And then in turn, you're receiving, your share, of that, and acquiring, and there's still a lot of them, but acquiring, properties that, apartment complexes, multifamily, larger projects that may require some rehab, some restructuring, you raise rents and all that stuff, get it stabilized. So now it's a profit center. And then, everybody can either sell it off to a different group. Exactly. Sell it off to a different group, and then you move on to the next thing. Again, there's a lot of that going on. We're actually working with someone now who is starting that with a project that we're working on. So Ken, that is interesting. So interesting. So for someone who, let's back up and have this conversation. What should people be looking for? Everybody, there's so many get rich quick schemes and all that kind of stuff, man. Yeah. And so what should people really be paying attention to?
Not to get rich quick schemes. See, I told you earlier, I'm a CPA. I spent 5 years as a commercial lender. There was a time in my life when I would pursue what, these get rich quick things, make a lot of money, short amount of time. I don't know if either it's a black cloud over my head or it's just kind of what happens, but it never seemed to work out. It just never seemed to work out. So that's one of the things that led me to real estate. There's nothing guaranteed, but I chose real estate because I felt like it was a get rich, and I can't say guaranteed, but it's a get rich with much more certainty plan that if I had some discipline and I stuck to it, I would have wealth beyond what I could ever imagine that I have. And that's the thing, people need to have patience. You're not going to get rich doing what we do. You'll
Mm-hmm.
make a lot of money, but it takes
Mm-hmm.
time and it takes discipline. And that's what we do. And that's why I chose that, because I'm a pretty conservative guy. I don't like losing money. And
Yeah.
so you think about multifamily, everybody needs a place to live. Like, how do
Mm-hmm.
you make that go away? If it does go away, nobody cares about money at that point, right? Because
Mm-hmm.
we got bigger problems than that. So
Mm-hmm.
I pick an asset that everybody needs. It doesn't feel like it's going to go away.
Mm-hmm.
Then I pick apartments because there's a high degree of predictability between, if I'm able to take that property, make it nicer, make it so that people will want to pay more. I don't gouge
Mm-hmm.
people, right? People move naturally. We renovate the apartment, then new people come in and they're like, sure, I'd pay more because you made it really nice.
Mm-hmm.
Now we've improved the cash flow of the property. But here's the kicker. Here's why it's get rich with much more certainty. Because I'm able to improve the cash flow of that property, people are always willing to pay for cash flow.
Mm-hmm.
So it was much more predictable when I added value. And as it turns out in our business, if you add $1 of bottom line cash flow, you add about $20 to value, $18 to $20 in value.
Mm-hmm.
That's huge, right? I like that predictability. So now imagine, we just have a property in our last fund. We're up so far in income, $25,000 a month. Do the math on that. That's millions and millions of dollars in new value that our investors are going to get the benefit of. And that's why I love this business. So you can see everything that we do, it's kind of all sourced on mitigation of risk and being conservative and just be disciplined and keep doing it. And guess what? Before you know it, you'll be wealthy. And that's why I do what I do.
So, you just touched on something that kind of brings me something to a thought process and a mindset for people, because some of the things that, when you're looking at investing in certain things, then there's a more aggressive, mindset versus a conservative mindset.
Right.
As an accountant, I know you probably operate more on the conservative side.
I
You
do.
want to, yeah. But, some people operate from they on the edge. They on the edge of the limb, like over here, just trying to balance the whole tight.
Right.
But approaching it with your strategy and I'm gonna say almost, because it's really almost, guys. It's never a sure thing,
Right.
but you minimize the risk,
yes,
so greatly that it seems and feels almost like, okay, we're surely gonna make some money with this project.
Yeah, that's exactly. You summed it up. That's exactly what we do. So now we do it over a multi-year period, years and years. It compounds, right? I did a little math equation for a recent show that we were at, and I looked at, if we just return 17% annually to our investors, which is high. But you look at our track record on Veravest, it's fully verified. You'll see that we've done more than that. We've done a couple less, but clearly 17% is not absurd. And when you look at this model, when you invest $100,000 and you fast forward 20 years, that 100 grand turns to like $1.2 million, $1.3 million. I mean, it's nuts. So think about this, right? We think, 10, 20 years, man, that's like forever. Guess what? I had kids. My kids are grown now. That went so fast that, barely even remember parts of their life. So, again, this is, if you're right. People do live on that edge and they love that huge hit. Maybe they don't mind it if they go to zero. I don't like going to zero on anything, my friend. Nothing. I don't like, that number one rule, don't lose money. Whatever you do, I really try to stick to that. So, those guys that are living on the edge, though, they don't mind going to zero. Maybe, they're comfortable. I'm just not comfortable with that risk profile.
That's fair. And you know what? Something else that you said, kind of buried in there, that I think some people miss. We talk about legacy, right? So legacy, building a legacy. You think about it. So you said, 10, 15, 20 years. So, let's say a couple gets married.
Yep.
They got money, instead of taking $100,000 and blowing it on the wedding, they take and I'm sorry, let me rephrase that, Ken. I'm sorry, because sometimes my listeners are sensitive as you ain't blowing it, okay? I'm sorry, but spending $100,000 on a wedding,
that's fair.
Take that money, buy into an investment such as this, and by the time your first kid is ready to go to college, you got $1 million+ potentially, depending upon the investment, that you can send that kid to college and help them start their life.
Yes.
That right there is legacy. That is effective use of the resources. And moreover, at that point in time, that child now has positioned themselves to start themselves all better in life so they can turn repeat that for their children.
And look at what
And,
you just started. Yes,
and
sir.
exactly. And that, ladies and gentlemen, boys and girls, dudes and dudesettes, that right there, that's legacy
Yeah.
and inheritance because you're teaching them
It's
early.
generational wealth. You have taught
Yes.
them to think completely differently. And look, man, now that I'm older, it makes me feel so good that I now understand how I can change other people's lives by talking about these things. I was nobody special growing up, man. My house was like 1,000 square feet in Toledo, Ohio, single family ranch. It was nothing special, nothing at all. And, anybody can get there. You know what stops them? Their
Yeah.
brain,
Yeah.
their brain,
Mindset. Oh
their
gosh,
brain and their
man.
mindset. Yes, sir.
Yeah. So Ken, I was having a similar conversation not too long ago, a few days ago, and I'm having this conversation with a friend. Shout out to Rob Wilson. Y'all know Rob Will. Used to be co-host here on the show some years ago. I mean, Rob is now, up in Maryland area. And long story short, we're just kind of talking and the things we didn't know. So like, look, like you said, age you are now, man, look here, I'm graying out here in the beard, rubbing all the hair out my head, all that kind of stuff, with the stuff with the business and all that. But what I'm getting is that, okay, we weren't taught this. We didn't. So we had to learn, we had to figure it out, from modest, humble beginnings to now okay, wait a minute. Well, if I'd have known this back then, if somebody would have known it to teach me then where could we be now? But we know now. So what are we going to do now to make sure that we move that needle exponentially forward for the next generation and so forth and so on? Like you said, that's the generational wealth. That's the conversations
Mhm.
that we're not having, Ken. And it's really interesting that you should bring that up.
Yeah, remember earlier on we talked about how what frustrated me the most when I looked at my daughter that night, I felt like I did everything I was supposed to do. I went to school, got good grades, did everything, and here I was, wait a minute. All I've done is just become a workhorse,
Mhm,
right? I'm working 24, not 24/7, but 80 hours a week as a CPA,
mhm,
and I didn't get to spend time with my family. And I thought, because that's what our parents told us. That's what they told us. And now,
mhm,
our my message to anybody now is, wait a minute. Yeah, you got to get educated. You need to know stuff, right? You need to understand the way the world works,
mhm,
but change your mindset, right? You can do things a lot differently than what I did earlier on. And, I started, in 97, I must have been 30 some years old, right? Early 30s. Imagine if I would have started that in my 20s. And that's what I've taught my kids. And that's what I want, hopefully,
mhm,
your listeners to
mhm,
do. And, the thing is, they're trying to figure out, that's fine that I want to do that. What do I do first? And my
mhm,
message is go learn. Go do
mhm,
what I did when I knew I wanted to do real estate. I went and figured it out and developed relationships. That's
mhm,
what they need to do right now. Listen to shows just like this,
mhm,
take as much as you can away, and then go learn. Go invest in
mhm.
yourself, learn the business, and then tackle it. And
Yeah.
before you know it, you'll be there. You'll be shocked at what you can accomplish.
It's all about the application,
Yeah.
so going back to what you were talking about, our application was okay, you went and got a job, but at some point in time, to be frank about it, some point in time, Ken, and I'm sure it was that moment, you bottling all this stuff and just kind of ooh and all that stuff,
Yeah.
and
Yeah.
your mind said, wait a minute, I can apply this that I know differently. I can apply this differently and have a different result. But it's in the mindset, because if the
Yeah.
mindset isn't growth oriented or isn't spurred, isn't motivated, I guess is maybe a term I might want to assign to it, then you stay stagnant and you do the same thing over and over and over. And it's a
Yeah.
monotonous, dreary existence.
Yeah, and it's not on purpose. It's just because people haven't figured out how to change that mindset, And what I want your listeners to do is just surround themselves with people who have made that decision, right?
Yeah.
I've always kind of felt like you are kind of the people that are around you. So if
Hmm.
you surround yourself with people that are doing exactly what you do, it's going to be hard to change. If
Hmm.
instead you said, you know what, I'm going to go out and meet these business owners or whatever, these guys that own real estate, and I'm going to hang out with them for a while, all of a sudden
Mhm.
you're going to be like, well, wait a minute, I can do it. There's nothing special
Mhm.
about those guys. I can do what they're doing. And then you start to believe, and because you should, and then you
Mhm.
start taking baby steps. See, I think that's the thing that gets people to change is who they associate with. Because I
Yes.
just see people, group think,
Mhm.
like-minded people tend to stick together. And so it's that person that says, you know what, I'm going to go try out another group for a minute and see how I like that group. And all of a
Mhm.
sudden it makes a change. And that's kind of what happened to me.
Mhm. And you're exactly right about that. Because, Ken, I remember I'd interviewed a guest, it's been some months ago, and she
Mhm.
explained how she got started in real estate investing. And I mean, now she's in the process of redeveloping a small town. Like the whole
Wow.
town went defunct or
Wow.
something, and she acquired all the real estate. And now she is essentially rehabbing and rebuilding an entire town. And she started by walking onto an investor's flip.
Yeah.
And she hung around, kept coming around, worked with him or stayed close to him. And he taught her what he did. And,
Hmm.
we oftentimes act as if the knowledge and those things are out of reach, that
Hmm.
opportunity isn't there, but it really, really, really and truly is.
Yeah.
So, Ken, our listeners, please give your contact information. How can people reach you? They're interested in maybe investing with your group.
Yeah. The easiest way, it's kripartners.com/invest. It's literally that simple. All we need is your name, your email address, because we're gonna stay in touch, and you can
Yeah.
get out anytime you want. But that'll get you into our system. You'll get to see what some of our deals look like. You get to hear from people who have invested with us. And I think I put our full entire vetted track record is there, vetted by Veravest, a third-party company. So
Mhm.
the numbers are real. And I put there's a couple YouTube videos out of that talk about how do we turn this apartment complex around? What do we do? Why do we buy it? All that kind of stuff. Very, my goal is to have it be very educational, so you can
Mhm.
understand what we do,
Mhm.
and then if it makes sense for you to, something you want to pursue an investment with us, then you can get on my calendar. But kripartners.com/invest. That simple.
Perfect, perfect. Well, Ken, look, we've had an amazing show. I really
Yeah.
appreciate you taking the time to be with us today for our listeners. Guys, hopefully y'all got a snippet, a nugget, or something in there. Please make sure you reach out to Ken. Please make sure, one, you take a look at the video so you know when you call him or talk to him what you're getting, and where the conversation is going to go, because this is for the serious investor. You're serious about, making a difference. You're serious about creating and building a legacy, that'll last your family for generations to come. God, that's what this show is about. That's what Ken is doing. And he can help you structure and help you to get to that next level. So, Ken, thank you so much for taking some time out of your busy schedule to be here on the show with us today.
Lauren, thanks for having me, man. I really have enjoyed it.
Awesome. So, listeners, guys, you know what we say, you know how we do, but we're going to do it one more time for you any doggone way. And that is to tell you we love you, we love you, we love you. And we're going to see you guys out there in them streets.